Welcome, and thank you for joining us today for how to structure real estate deals in your IRA. My name is Alex Perney. I'll be your moderator today for this presentation. A little bit about myself. I'm a business development specialist with Advanta IRA. I've worked here since 2012, and I attained my CISP designation from the American Banking Association in 2014. It stands for Certified IRA Services Professional, which means that I am more than capable of answering any of your questions with regards to self-directed IRAs, but any type of IRA or qualified plan that you might have. This includes anything from old governmental plans to 401ks, IRAs, health savings, and the like. So please don't hesitate to ask us any questions, as I will be able to get all of them answered. A brief disclaimer before we get started is that Advanta IRA and our employees, we do not provide any tax or legal advice or investment advice, and we do not endorse or promote any products. All information today presented here is for educational purposes only, and we highly encourage anyone that is looking to do self-direction to consult with an attorney, accountant, or financial advisor before entering into any self-directed or any type of investment for that matter. Thank you. A brief overview of exactly what we're going to be covering today in our agenda. We're going to define what an IRA is, especially with regard to self-direction. We're going to cover a little bit about Advanta IRA ourselves as a company, the different types of plans that we have, the investment options available to you, and then what you all are tuning in for today is the case studies of how to actually structure real estate within your IRA or qualified plan. So what is a self-directed IRA? Many people might be curious to know what the differentiation is between this and an IRA with someone else. A self-directed IRA is simply a unique type of investment account that allows you to truly invest and direct your retirement assets into things that you actually know and understand. This means that you will be able to realize the gains that you see in your personal life and things that you're doing in things like real estate, as we will be covering today, in a tax-qualified account such as an IRA or possibly even a 401k as well. This means that you have control over exactly what goes into your account. And the big difference between that and picking of stocks and bonds is that we actually let you select the type of investment. You're not just picking from a list of things that we offer, such as you would have with maybe a Fidelity or Charles Schwab, but you're actually picking things that you know and understand. You're not just getting a blanket list of things that maybe sound attractive. You're actually being fully involved with the selection process of your actual assets in the account. And that brings up another point of why people may not have heard of self-direction in the past. The main reason is that big banks don't have any vested interest in selling you a piece of real estate. They make their money on selling you investment products that they have an interest in. So by selling you the product, they make money by selling you something that they are actually invested in as well. Whereas with Advanta, we provide the platform for you to truly take control and make your own financial decisions and participate in the actual growth of those decisions within your retirement account. A little bit about Advanta IRA. We are a very experienced company with over 20 plus years of investment experience in the self-directed IRA realm. We have been operating out of Largo, Florida since 2004. We have many clients that are with us, and currently we manage over $700 million in assets for our network of clients, as well as working with a network of trusted CPAs and attorneys. Specifically for every single one of our clients, we have a dedicated account manager that is there to answer any questions and be a resource for them. So instead of calling up and getting a phone bank if you want to do real estate or if you want to do mortgage lending, or let's say you wanted to buy a piece of private stock, you don't get a different person each time. You get a dedicated individual that is there to help you and make sure that your goals are accomplished in a timely manner according to your wishes. And also, we are fully FDIC insured for any of your deposits that come into Advanta. So just like with any normal banking relationship that you'd have with any other IRA administrator, you have $250,000 of FDIC insurance on any cash that you do hold in your IRA here with us at Advanta. We also like to provide you with the tools in order to make sure that you make the best possible decision, and also that you're identifying the assets that are going to be best for you in your retirement plan. We have many different Advanta events, such as this one that you're tuning into today. We provide seminars, we have webinars, we also do networking events and lunch and learn events to help you understand and grow the potential that you have within your IRA. All of our events that we hold are free, so please feel free to consume as much of our content as possible. We like to put it out there because 9/10 of our battle is making sure that people understand the vast array of different types of assets that they have to invest in, that you're not just constrained to doing stocks, bonds, and mutual funds. You can utilize your retirement account into things such as real estate, as we'll be getting into today, and many other types of truly self-directed assets. We offer Advanta on demand as well. So we host all of our webinars onto our YouTube channel, so you at your leisure can go on, select which topic you're looking to get more information on, and then actually watch presentations at your convenience if you're not able to attend live onto our YouTube channel. We also offer information on our website that can be consumed as well that's not on our YouTube page. And if you have any specific questions, we do encourage you just to submit an information request, and within 24 hours, one of our business development specialists will reach out to you to get your questions answered as well. And then lastly, we also maintain an up-to-date blog that will give you industry news and updates, insight from our team professionals, and really help guide you on the way to making the best possible decision for your particular situation in retirement. So lastly, with regard to what we offer, we always ask you, schedule a consultation with us. We don't charge for the phone call that you place into us, where if you have a CPA or an attorney, they're going to be charging you for the minutes by the hour that you're calling them and using their time. If we can get a simple question answered for you and get you into the most specific questions and answers possible that you need, we can really help you save money in the long run by using your investment professional's time in as efficient way as possible, so you're not having to go through all of these simple administrative questions. You can get right down to what exactly you need to ask them, so that way we can help you save you money in the long run as well. So after getting through all of this, there are many different types of plans that you can utilize. Most people think of an IRA in the most traditional sense, and no pun intended, the traditional IRA is the most common type of IRA. This is what you will have if you are making a deductible contribution into an IRA. So if you put your either $6,500 or $5,500, depending on your age, into an IRA each year and you get a deduction for it, you most likely have a traditional IRA. This is also the vehicle that receives deductible contributions that were made into a 401k as well. So if you had an old employer that you worked for many years and then changed jobs and you moved that money into an IRA, it's most likely within a traditional IRA. Now, everything presented up on the screen right here is able to be self-directed, not just the traditional and Roth. Some people might be under the assumption that you have to have a Roth IRA to self-direct. Completely not true. You can self-direct any of these types of plans into any of the types of assets we'll cover today, and maybe even some that we haven't seen either. We can always try to work with you to make the investment that you're looking to do work within one of these plans, and we're always happy to field those types of questions. So with the traditional IRA, as I said, you do get a deduction for adding money into it. You are paying tax on the seed, you are paying tax on the fruit that you pick off of the tree instead of the seed that you plant. Whereas with the Roth IRA, the big popularity behind this plan is that you pay all of your taxes up front, so you pay tax on the seed that you plant and then pay no tax when you take the money out and take fruit off of the tree at retirement. So all of your earnings are always going to be taken out tax-free if it's a qualified Roth distribution, which is a very attractive component of that type of plan. Keep in mind with everything up here, all of the activities that are done within these types of plans are always going to be exempted from capital gains tax, so you're going to be getting to avoid that short-term or long-term capital gains and ordinary income at the time of receipt of the income. So if you have rental income in one of these, if you have upside in an equity of the sale of a property, you're not going to be having to worry about any of the taxes at the moment of transaction with any of these plans. It's all only considered once you take money out of it. So with the traditional and Roth IRA, those are the two types of retirement accounts that are specific to individuals that are up here. We can also handle small business plans as well. So if you're a sole proprietor or you have a business with a partner or your spouse, we can also help you utilize a much higher deductible type of plan than what you're going to be seeing with a traditional or Roth IRA. To briefly cover the contribution limits for the traditional and Roth IRA, if you're under the age of 50 and a half, it is going to be $5,500 of earned income that you can put into a traditional IRA or a Roth IRA on a yearly basis. If you're over the age of 50 and a half, you have a $1,000 catch-up you can also make, bringing your total up to $6,500 a year for either types of those plans. While that's all well and good, some individuals that have a business might want to contribute a much higher amount. So there are plans specifically geared towards businesses. Now, if you are a self-employed individual, or as I said, if you have a spouse that works with you or a business partner, you might qualify for an individual 401k plan. It's a very powerful tool that can help you contribute up to $53,000 or $59,000 depending on your age into the plan, and it differs slightly from the SEP and the simple IRA as well. So the three different types of small business plans that we offer are the individual 401k, the SEP IRA, and the very poorly named Simple IRA, which is anything but simple. And the SEP IRA is more of the streamlined and updated version of the Simple IRA. So the two that I'm going to touch base on with regard to small businesses are going to be the SEP and the individual 401k. Both have very similar total contributions amounts, with $53,000 being the baseline for both. However, the individual 401k plan does have the ability for certain individuals of a certain age to contribute up to $59,000 into that plan. Excuse me. The two basic separations with this is that the individual 401k plan is going to be for individuals in business that are looking for a high deductibility of their corporate taxes, whereas the SEP IRA focuses more on individuals that are looking for a personal deduction. The basic split between the two is that with a SEP IRA, you can contribute up to $53,000 of your base salary into the plan, thereby creating a personal deduction for you. And the individual 401k plan, you can only contribute up to $18,000 of personally deductible elective contribution, but you can contribute up to an additional $35,000 of profit sharing match, which is corporately deductible into that plan. So getting with a CPA to see which one makes more sense is certainly advisable in that instance, and both of these types of plans, as well as the simple IRA, can be self-directed as well. The SEP IRA, traditional, Roth, simple, and individual 401k are certainly the most common types of plans that we administer with real estate assets and anything else that's self-directed. However, one thing that people may not realize is that education savings accounts and health savings accounts can also be self-directed. If you're an individual with a high deductible healthcare plan, which you would need to check with your insurance provider to see if you qualify, you could utilize a health savings account in order to self-direct and get working for you in that instance as well. And education savings accounts, also known as Coverdell Education Savings Accounts or abbreviated CESA accounts, can also be self-directed in that same manner as well. Although not as common because of the need for higher liquidity in those accounts for the paying of qualifying expenses out of them, you certainly can use them. And if you do want to get that working for you, by all means, please do contact us and we will show you exactly how to self-direct an education savings or a health savings account as well. Now that we have covered the types of plans that we offer, let's get into a little bit of the types of investments. Although we will be focusing primarily on real estate today, the scope of the type of investments that you can do is much broader than just doing real estate, whether that is fix and flip, whether that is purchasing a rental. There are many different ways to be real estate-ly centric involved, but you do not simply have to use a self-directed IRA for real estate. About 70% of our business is real estate in one way or another. So starting at the left of this illustration, real estate in title would be a majority of our clients. They buy a piece of real estate, they either fix and flip it for the upside in the equity, or they rent it out for a continuing revenue stream from that asset. The other way that people get involved with real estate is instead of actually purchasing the real estate in their IRA, they will issue a note or a mortgage to an individual that's looking to purchase a house. Now, the type of lending you do does not have to be a mortgage, meaning that the money you lend to someone does not have to be recorded as a lien position on the property. You can lend to someone in many different fashions, whether it be for equity participation, whether it be for hard money, for a contractor to finish something, or even any other types of slightly more exotic lending that we'll cover in brevity a little bit later on in this presentation. Another way that people structure their investments into real estate with Advanta is some of them will utilize either a single member LLC or a trust to hold title to their real estate investments. There is a case study that we will cover on that slightly later on in the presentation. However, the other types of investments that people primarily utilize self-directed IRAs for is private placements and private stock. Let's say there is a company that is starting up and they're offering preferred shares before they go public. An IRA that is administered by Advanta can certainly purchase those shares, whereas someone like Fidelity or Charles Schwab will not allow you to purchase private stock. We certainly have the workflows and the capability to let you invest in those types of assets to see the potential upside once they have their initial public offering and they go public. Some people elect to want to go a slightly different route and trade foreign currencies, so you can do that with an IRA as well, or do different types of futures. You can also do futures with options and different types of commodities and certain types of precious metals as well. They kind of fall under the other investment category. So these are what make up the primary basis of what our clients invest in. However, with the top of their saying other investments, there is a significant amount of different types of investments that can be utilized with this, and they range from everything from oil and gas rights to tax certificates, structured settlements, convertible notes, accounts receivable, and many, many more. I do encourage you, if you have questions about the different types of other options for self-directed IRA investments, give us a call and we'll go through them with you, because we could honestly spend quite a bit of time just going through the other investments that our clients have participated in the past. So now, with regards to everything, how do you get started with this? The process for initially establishing a self-directed IRA and getting ready to do these types of investments is very straightforward. The first step in the process would be to establish the Advanta IRA. It only takes a few minutes, and what you need to do is complete our Advanta IRA account application with a business development specialist, then send us a copy of your photo ID, and we get the account established. The next step is to bring money into the account. It's done in one of two primary ways. If you currently have an IRA, we can do what's called a custodial transfer, which is a non-taxable and non-reportable and unrestricted movement of funds from one IRA to another. So if you have a traditional IRA with a bank and you'd like to move it to Advanta, we simply send them the request that we have both signed, they move the money directly to us, and it's ready to be self-directed. Let's say you still have an old employer's 401k and you'd like to move money from that. Whereas you cannot do a custodial transfer, we can do what's called a direct rollover. With the direct rollover, you submit a request to the 401k administrator. They send us the funds directly. You have no actual receipt of the funds, and it is a non-taxable movement of funds. Do keep in mind that it is reportable, so you will need to make sure that you get the proper forms from the 401k administrator as well as from Advanta at the end of the year. Once you've taken care of establishing and funding the account, you're then ready to get started with investing. So you can choose from any of the types of investments that we have briefly covered. However, we are going to get a little bit more involved into real estate, but the sky is essentially the limit when it comes to what you're going to be looking to invest in. So long as that we can work with the investment provider to properly title it in the name of your IRA, and also make sure that we can hold it within your IRA as well, we can typically make sure it gets done for you. So those are the three steps involved in actually getting started with self-direction. It's very easy, and you're pretty much ready to start investing within about 2.5 weeks from the time that you open the account. So getting into what you actually have tuned in for today. Investing in real estate, how to structure real estate, and how to find the deals within your network to be able to do this type of investing. I always encourage people, the biggest way to find your real estate or find the investment that you're looking for in a self-directed fashion is use your network. The network that you have established in your life is one of the most powerful tools that you can have when it comes to actually investing with a self-directed IRA. If you are networking with people and you in your professional capacity or even in a casual capacity invest in real estate personally, use those network connections, use the people you know, use the people that you've dealt with to help build your retirement as well. It doesn't just have to be for personal use. You can use the people that you have known and become and trust over the years to help and find the deals for your self-directed IRA as well. It not only lets you invest with what you know, but more importantly with who you know. Many people may not necessarily know every single person on the board of a Fortune 500 company that they are putting their retirement funds with. However, if you have worked with someone, let's say a contractor or a real estate agent for the past 15 years and you know them intimately well, you do know you are starting with a much higher leg up in being able to do your due diligence correctly and thoroughly with purchasing real estate than you would be in almost any other capacity with other types of IRA investing. So that's one point that we really like to drive home, is that you already have an extremely powerful network of people that you can use to help you with your self-directed investing here at Advanta IRA. So buying real estate in an IRA. As we mentioned, the typical types of real estate in simplicity are going to be your rentals, your flips, raw land, etc. So how does it work within an IRA? The IRA in this instance will be the purchaser of the actual asset. So the property is going to be purchased in the name of the IRA, which would be Advanta IRA, FBO, which is for benefit of, John Smith IRA, and the IRA number. This is how we make sure that all of the correct reporting and all of the great tax benefits from the actual asset that you're purchasing are maintained. If you do have privacy concerns, we are more than happy to redact either your name or the account number from the public record, but we do need one of the two. So we can amend it to either say Advanta IRA FBO IRA number or Advanta IRA FBO John Smith IRA. So we do try to be very flexible with that. Just make sure that when you are talking to your account manager that you do convey that to them. All of the funds for the purchase come from the IRA. So purchases can be made with partners, including yourself and others. So just because your IRA may not have the entire capital to purchase a property outright, if it only has $60,000 of a $100,000 property, you could bring in the other portion personally, and then you would each purchase a tenant and common share of the property. So always keep in mind that the deal doesn't always have to work 100% in the IRA. Utilizing partnering to make it work is always an option for you. Now, at the very end of this, we will touch base with a few people who you are not allowed to deal with, but do keep in mind that just because you're not allowed to deal with them in purchasing an asset directly, you can always typically make these things work when you do utilize partnering. So just because you don't have enough money in your IRA doesn't mean you can't make the deal work. Partnering can typically solve most of those problems. And then after you have purchased the asset, all of the income, whether it's rental, sale equity, etc., all comes back to the IRA tax-free. You're avoiding any sort of capital gains. You're avoiding any sort of ordinary income on the duration of the asset. It's all coming back tax-free with irregard to it being a traditional Roth, SEP, 401k. No taxes are paid at that time. The only differences in the types of plans that you're looking at are going to be taxation when you take money out. So they all accomplish the same great feature of avoiding taxes at the time of the investment. So for our first case study, we're looking at John Smith has identified a property being sold as a short sale. So he's using his own personal network. He has found the short sale. He has an IRA. The offer is accepted for the property at $120,000. As covered on the previous slide, the property is purchased underneath of John's IRA, and the whole $120,000 is funded from the IRA. So now the IRA that John holds owns 123 Main Street. The strategy in this instance is the property is going to be rented for $1,200 a month. So for 2 years, that equals $28,000 before any expenses. And assuming that there weren't very many expenses past just taxes and everything else, $28,000 is, roughly the mark that they're going to be looking at. In 2 years, John sells the property for $170,000. Now remember, he purchased this for $120, so that means that the total sale of $170 is going to be $50,000 of upside profit. So since no taxes are being paid on the actual investment, so he's not paying any ordinary income, he's also not paying any capital gains taxes on this. He is seeing a net profit. Obviously, if there's some expenses, that's going to be adjusted, of $78,800 in 2 years for this investment. John now has $198,000 for himself to go invest in the next deal. So he's taking his IRA money, investing it in the piece of real estate, generating 2 forms of revenue from it. One in the passive income of the rent, which after 2 years of $28,000, and then the $50,000 of profit. The $78,000 coming wholly back into the account now increases his ability to purchase something by almost double. So you can see how this in broad stroke terms can really help you achieve a lot greater purchasing power than if you were to do this personally. Because keep in mind, if you're doing this personally, that $28,000 of rental income could potentially be ordinary income. You also have the profits could potentially be getting hit with capital gains taxes at the time of the sale. So the $78,800 is going to be a significantly smaller number if you were to be doing this personally. So very interesting to illustrate it with seeing how much growth you can see potentially in 2 years. Now, looking at purchasing real estate, as we talked about in the previous slide, is a very common type of investing that is done here at Advanta. People will purchase real estate. They will either rent it or flip it. But a lot of other people that make up the 70% roughly that we have that are involved in real estate look to lend to people on different types of projects. Now, the most traditional type of lending for real estate is going to be the mortgage. The attractiveness of this is that you have a fixed rate of return. In the event that the person does not repay you or they are deemed to be in default, you can foreclose on the property, and then your IRA would have the property moved into its account. So just like with the real estate, the IRA would be named on the note, so Advanta IRA, FBO, the client's name and account number is going to be stated as the lender. Now, you don't necessarily have to do a mortgage. It is a very attractive type of secured investment. However, some clients do manage to see higher rates of interest that they're charging on unsecured loans. So you can issue someone a loan that doesn't have any security such as a mortgage would, insofar that it has a recorded lien against a piece of property. You could issue someone an unsecured loan, either for hard money for a rehabber or a flipper to go buy another piece of property and then repay plus interest. So typically people are seeing higher interest rates with that, or gap funding. Maybe a contractor that you know in your personal network of investors is running short to finish a project. You could lend them the money out of your IRA and then see the principal and interest be returned for that. Please do keep in mind that any type of lending will need to be checked for usury, meaning the amount of interest that you're charging according to the state that you're lending in. That is not something that Advanta can advise or check for you. So please do make sure that you're doing your due diligence and making sure that you are charging an appropriate amount of interest. Just a small disclaimer for doing this type of investing. So those are the mortgage and the unsecured loans are going to be the two more readily thought of types of lending in the marketplace of people that do this type of investment. However, there are a lot more different types that people can get involved in. In the instance of equity participation, a very interesting part about being involved in the equity is that instead of getting a fixed 3% or 6% on a note, you as the IRA holder tell the individual borrowing, I would like to, instead of getting a fixed principal and interest rate, would like to see 30% of the profits that you sell the property for. So if you lend someone $100,000 with an equity participation note, they buy a property for $100,000, they sell it for $200,000, your IRA would receive $130,000 back it would be getting its principal of $100,000 plus 30% of the profits at sale. So making a deal work like that can be very attractive, especially if someone needs to utilize more of the funds that you're lending them instead of having to pay out an interest payment to you directly. And then you can also do wrap loans and capturing the profits from a secondary payment. That is definitely a slightly more exotic form of lending that we're more than happy to explain on a more case-by-case basis. So feel free to reach out if you have any questions regarding these 4 popular types of lending done within an IRA. So case study 2, we're going to be covering 2 different types of lending. We're going to be going into the equity participation and also the mortgage lending aspect of this as well. So in the mortgage lending aspect, Sam has a network of investors in Florida. He has a Roth IRA that he utilizes to lend to investors and flippers. So he's only dealing with investors in this instance and issuing them first mortgages, meaning that his IRA holds a lien against whatever property that the investor or the flipper is buying. All the interest and payoffs are paid directly back to the IRA and are tax-free. So he's not having to pay any income from the interest that is coming in. He's not having to worry about making any sort of capital gain on the money. And with it being a Roth IRA, if he's making a qualified Roth distribution, he is never going to have to pay tax on that money ever. So that is a very attractive portion of doing this type of investing through a Roth IRA. Now, the type of lending that we covered previously in the last slide of equity participation might not be as widely known to many people as mortgage lending or even unsecured lending, which is a personal loan in essence. So with equity participation in this instance, Jane and Andy know a contractor that flips properties. So the contractor buys a property, fixes it up, sells it for a profit. They lend 50-50 from each account, so they partner together to lend to the contractor for the rehab. Instead of getting an interest rate, so instead of getting a stated 6% or 10% annual interest rate on the note, they write the note with saying that their respective IRAs get 30% of the profits at sale. So instead of the contractor having to make a monthly payment where they are paying the interest on the money that they lent out, they get to utilize the entire amount of money for doing the rehab, and then at the sale, they are paying 30% of the profits that they realize to the IRAs in lieu of an actual monthly interest payment. So each IRA gets a portion of the upside while not having the liability of ownership. So in this instance, they do get to participate in the fact that they are seeing part of the profits from the sale of the real estate, but they're also not being involved in the liability of owning real estate. Don't have to worry about the trip and falls and the lawsuits necessarily so much in this instance, as they are just participating as a lender. So something interesting to think about. It's just another way of doing the lending in an IRA. Again, with any type of this stuff, do make sure you are checking with a qualified representative such as a CPA or an attorney to see which strategy works best for you. But whichever one you do decide on, we can typically always make it work within the account that you choose. So lastly, we're going to be covering the other types of structures that you can get into with real estate in an IRA. So people typically in the previous instances will be doing this directly involving Advanta. So they will call up Advanta, their account rep, and say, hey, I'd like to buy this piece of real estate. We will walk them through the process. We will be signing all of the closing documents. And essentially then we will be holding the title here and any sort of indicia for that investment directly in our vaults here at Advanta. The other type of investing that clients do a lot of the time, or I should say not a lot of the time, but they do instead of doing it directly through Advanta, would be to utilize either a LLC, which is a limited liability company, or some form of a personal property trust in order to hold the assets underneath of the IRA. So in either one of these constructs, the IRA will be the sole owner or the sole beneficiary grantor in a trust of the subsequent entity. So the client will form a new LLC or trust. The IRA, Advanta IRA, FBO, client's name and account number. In the case of the LLC, would be the member of the LLC. Any investments done underneath of the LLC would be in the name of the LLC. The checks, instead of being written directly from Advanta, would be written by the manager of that entity. And then in the LLC's instance, the manager can be the client. So the client directly is going to be writing the checks, is going to be managing the affairs, and actually executing all of the investments. The money is directly funded from the IRA in a lump sum capital contribution to the newly formed LLC for doing these types of investments. Do keep in mind that although this is a structure that you can pursue, it does take a little bit of the record keeping away from Advanta, and it is not right for everyone. So making sure that you have done your homework and gotten the proper advice for doing either of these two types of structures is very advisable. The other name for this type of structure is what's called checkbook control, checkbook LLC, checkbook control IRA. There's a myriad of different terms out there in the industry for these types of structures, and they all kind of refer to the same thing. And either of these two structures do accomplish the same ultimate goal. Now, as opposed to using an LLC, a trust cannot be managed by the account holder. A trustee is inherently a fiduciary to the entity, and a IRA holder cannot act in a fiduciary capacity to itself. So the trustee in a trust would need to be a trusted individual or a third party. The check writing of that trust would be done by the trustee. The title of the assets, just as in the LLC, would be in the name of the trust in this instance. And the involvement of the IRA in this structure would be the grantor beneficiary of the trust as opposed to being the member of the LLC. So some reasons that people do this is for a little bit greater control. Maybe they need something done a little bit quicker, or they need something to be done often when Advanta is closed. So this type of investment structure can really maintain the ability to act very quickly while also giving you the advantage of having the great tax implications of utilizing an IRA. So the first example we're going to cover is buying properties at auctions. Sometimes various auctions require a check written that day. They require money wired within 20 minutes. They require some sort of construct that makes it administratively infeasible to do it underneath the IRA directly. So in this instance, Rachel invests all of her Roth IRA into a single member LLC. She forms a new LLC after the account is open. The IRA purchases 100% of the membership in it. She is named as the manager of this manager-managed LLC, and then she moves forward with her investment strategy. So her investment strategy in this instance is to buy foreclosed property at the day of a sale for $100,000. The LLC, after it pays the $100,000 for the property, pays for all the rehab costs associated with that asset as well for $30,000. As the manager of the LLC, Rachel sells the property for $210,000. Now, in this instance, Advanta is not signing any of the closing documents. Advanta is not involved directly in the actual investing and the rehab costs. It's all being taken care of by Rachel on the side of the LLC. And at the time of the sale of the property, all the funds then in turn will flow directly back to the LLC for the next deal. So all of the funds are going to be cycling on the side of the LLC without Advanta having any direct involvement in this. It's a very similar structure to what happens in a trust. So in this instance, Jim forms a trust under his SEP IRA. So as you remember from previous in this presentation, a SEP is a small employer, is an employer-based plan, so a simplified employer pension to invest in a manufactured home community. After Jim has formed the trust and funded it under his IRA, he directs his trustee to buy a 30-lot park in Georgia for $110,000. He creates revenue streams from installment contracts on trailers and from lot rent charged on the trailers as well. The continual revenue stream is held by the trust and then is ultimately directed by the trustee working with the client directly. So either of these two forms can be utilized for vast array of different reasons, and you don't necessarily have to use them, but in some instances, it will certainly make the administration of these types of assets easier if you are willing to work within the constructs of the two types of either an LLC or a trust, and you fully understand all of the responsibilities that go along with that. So a good illustration of how to utilize checkbook control with investing in real estate as well. So that concludes our presentation today. A few of the events that we have coming up, we do have a lunch and learn at our office in Largo on November 18th, and on November 29th, we have the Checkbook IRA, which was the last slide. What is it and how does it work? Is a webinar from 12 to 1:15 p.m. So if you are very interested in the latter part of our slides today, please do tune in on November 29th to get some questions and answered for that. Again, my name is Alex with Advanta IRA Services. Please don't hesitate to contact me directly, or if I'm not available, one of my associates in the office will be more than happy and capable to answer all of your questions. We do very much appreciate you tuning in, or if you're watching this on YouTube, thank you very much for coming to our YouTube page. Please don't forget to subscribe and like if you are on YouTube. It does help us out a great deal, and we want to make sure that we get all of your questions answered. So with that, thank you very much and have a great day.